Now moving on, daily pricing decisions. As a revenue professional, as a revenue manager, someone involved in pricing decisions, uh, what are the decisions which you have to make on a daily basis? Uh, and what are the things which you need to consider? Here we'll discuss some of them. So uh, the pricing decisions, as you can see here, it can fluctuate considerably, which can be quite challenging. And here I've listed down some of the strategies to employ, uh, which will help you simplify the decision making process. So first, you have to look at the pickup trends. What are the pickup trends? You can look at the reservations made yesterday or in the past 1 week, for example. So you'll have an understanding how's your pickup, and then based on that you can decide. So as I listed down here, that you need to avoid adjusting your pricing and restrictions solely based on the pickup number, because that won't make sense. You have to understand what are the factors which are driving this pickup before you just make any changes, because you have to thoroughly think of the factors uh, which has created that demand or which has generated that pickup. So you have to reflect on what was booked yesterday. You can just simply pull out a report of reservations made yesterday from the PMS you are using, and you have to see how it has impacted your existing business. So existing BOB, as we call, or business on books, what you were having, uh, how that pickup of yesterday has impacted the existing business which you had already on the books. So when you are trying to contemplate rate increase, you have to be very cautious, uh, as you need to observe that uh, if your pickup is basically from the segments with the fixed rates, let's say tour operators, which is one of the lowest selling rate, you have to think whether it's just they are the ones sellings, or you have also other segments selling. You have to also think of whether your pickup, the rooms bookings which got picked up yesterday, are from the lower paying segments, which could be, for example, as I mentioned, tour operator, travel agents, uh, probably corporate bookings. And if this is the case, then you have to consider implementing some restrictions. So either you can restrict them by implementing uh, minimum length of stay restrictions, so they won't be able to just book for one night, or maybe you can just close the low room type and just sell the second highest room category to them. So this way you can stop receiving the low paying, the you can basically stop receiving the bookings with the low rates, because at the end it'll have a negative impact on your overall ADR, and as well as the revenue per available room. So I suggested here that periodically, or maybe 2-3 times a week, uh, you need to project what your situation will be in the next 4 to 12 months, so you'll have a little bit of understanding. And then when you are thinking this way, in a forward thinking process, keep your eye on the news, on the trends of the bookings, how the business is received, what kind of business you are receiving, which segment is producing more. So you keep an eye on that and see where you are, where you have to make some changes, adjustments, putting some restrictions, etc. because you have to keep in mind that you have a target, a budgeted target to achieve, not just the numbers, but you'll have a certain ADR or RevPAR which you are targeting to achieve. So you have to be very cautious when you are thinking about making some price changes. You have to consider all these different mm, different factors which can have impact on the pricing decisions which you'll make. It can be positive or negative depending on how you employ them or how you implement them. So first was pick up trends. You have to keep an eye and then make adjustments where necessary. Second is market and competitors. So you need to see how your competition is doing, what are the actions they are doing, whether they are having some kind of flash sale, some promotion, are they sold out on the lower room type, how basically they are approaching the market. You have to keep an eye on that. By observing their strategies, you can have uh, you can see the opportunities basically where you have to adjust your rates, and you'll also have an understanding of the emerging trends, because the person working for that your competitor hotel or the business is also keeping an eye on different events, and they might have, for example, some large group which you are not aware of. So by looking at them and by having an eye on the competitor decisions or the pricing strategies, it helps you understand and gain more insights, I would say, about the market which you might have otherwise missed. Also, you'll have to see if you currently lack a dedicated tool for tracking this information. Um, because if you are not using a revenue management system, then you might, and for sure, actually, if you are not using, then you will not have access to this information. However, in case you are connected to some of the major online travel agencies, which are Booking.com and Expedia, they offer free tools. So on Booking.com, when you log into your extranet, you'll see Insights tab, and there you will be able to find different booking pace, sales statistics. You can check for the past few months, the next few months, based on different geographical locations, how many number of bookings you have received, what are your top producing markets, etc. Uh, Expedia also offers something similar. It's called Rev Plus. Um, the information on Rev Plus and Booking.com analytics, if you compare, Booking.com gives you much more information. However, if you do not have any tool at all, then looking at both of these options which these OTAs provide you can help you basically in your pricing decisions. Inventory control. Now, you have to make sure that the room inventory which you are having at your hotel or the business you run is in equilibrium by having the rooms available precisely when they are needed. So sometimes, for example, you don't want to sell your standard room, the starting room category. You don't want to sell all of those rooms to the low paying guests or tour operators, travel agencies, corporate, for example. You want to yield. So in case you have some rooms left, you might want to close uh, and then start selling the higher room category, and later on you might need those uh, low room types. In case you see that the pickup trend has slowed down, you can open them. So you have to think of which room is picking up and at what rate is it is being booked. So you have to be cautious about it, and whether you have to also think whether it is aligned with your in a long run, whether it is aligned with your budget, what you are aiming to achieve. For example, as I was mentioning, if the most sought after room type, mostly by the contracted partners, if it's fully booked, it's wise to consider options like upgrades or establishing overbooking rules. Now, this is another way where when this is the strategy which you can use, particularly uh, when you can say that you have uh, not a very high demand, so you can keep booking the lowest room type and then offering upgrades. Because if you are thinking and based on the trends or the booking pace, if you think that you are not getting the bookings for the higher room categories, then you can keep the lowest room type uh, open, keep receiving the overbooking, and then you can upgrade those guests to the next um, room category. But this is not advisable, obviously, in the peak season, when anyways you are getting the business. So then these measures will prevent you from missing out on available opportunities such as long-term guests or last-minute premium rate bookings. So as I mentioned in the first point, you might want to keep some of your rooms from the lowest room category. You can just close them, start selling the high room categories, but then at the end, for last minute bookers, for example, you just open the standard room category, but that is booked on a high premium rate, which obviously helps you in optimizing the ADR for that particular room type. If you are just calculating or thinking of a particular room type, what is the rate and the overall ADR, if you are calculating for a particular room type, then this can help you. If you keep the lowest room type for premium rate bookings towards like last minute or walk-in guests. So again, the same thing. If your standard room category is sold out for Friday, you risk losing potential guests who wish to extend stay beyond Friday. This is an example, basically. So in that case, if you are thinking that you might have a longer average length of stay from a particular segment, you might want to overbook a room for just one night, for example, if for that particular night the room is not available. However, uh, you risk overbooking it so that for one night you can upgrade another guest, but you are not going to, because this way you are getting, let's say, a booking for 5 or 6 nights, which obviously it's good for you, rest instead of having just one nighters, because obviously each booking you have an acquisition cost to convert the customer. It has an additional cost for that. So that also, depending on the situation, you have to decide, in case you think that if we keep this room closed for one night, we will not have a booking for example, uh, where the guest is trying to make the booking, as this in this example, someone is trying to book on Friday. So let's say you're on Friday, your standard room is zero, it's not available, but you have a request starting from, let's say, Wednesday till Monday. So just because of this one night it's not available, you are not able to book. So on for that one night, you can risk having overbooking, and you can extend another one nighter and secure this booking from Wednesday till Monday. So that's what I try to what I meant by having this point, but it's good that I explained so you have a better understanding about it. Now, the fourth point in daily pricing decisions: lead time patterns. Lead times are basically it's how much in advance someone books a room. So you need to ask yourself, based on the data, a question that can the historical data and the continuous patterns assist yourself in identifying the opportunities to enhance the segmented lead time, because different segments will have different lead times. You'll have transient guest probably booking very last minute. The clients, the guest booking through tour operator, they will book very much in advance. Uh, you'll have some of the segments which are booking with lead time between, let's say, 60 to 90 days in advance. You'll have some segments where you are getting the bookings 30 days in advance. Some will be having a 14 days lead time, and some might have 3 days lead time. So you have to ask yourself, and basically then you you generate a report from your system, and that report will tell you what is the pattern of lead time booking, like for different bookings from different market segments. This will help you to understand the current pickup you are having, and also it will help you to know whether you are going to uh, make it in the coming few days. For example, if you have a budget target for this month, let's say 100,000, and based on looking at the different market segment lead times, you can predict that how many bookings you are going to receive, and then you will have an understanding whether by having these bookings will you be able to achieve the target which you aim to achieve or not, and then accordingly you adjust your strategy. You, by looking at this reports segmented lead times, you'll um, be able to identify a market which books much in advance than your domestic bookings, and then it would be wiser to exploit this opportunity in future for similar periods. So this will uh, give you an indication of what you need to target at what time of the year uh, to get the bookings coming from that particular market segment. Uh, this is a suggestion basically that you should try to attract more of this business through direct channels with a lower distribution cost, as well as lowering the commission, because the bookings now this is we can discuss more in detail, but just to mention here for someone who is at an entry level. Now usually OTAs charge hotels 18 to 90% commission. That this can vary, but 18 to 19% or 20% commission for each booking you get from those particular online travel agencies. Whereas if someone books directly through your website, obviously it has also a cost. In case you are using CRS system or a channel manager, it has a fee, but that's not as high as 18 or 20% commission for OTS. Or in case someone books directly with you over the phone or through the email, obviously it has no cost in terms of commission, but obviously it has overhead costs. So it would be wiser, to attract this kind of business, which the segments basically which book very much in advance, uh, and you try to direct them to your direct channels, such as your website, booking with you directly, because this can lower the commission and ultimately helps you optimizing the profits. Um you also have to monitor the trends on daily basis to probe during the monthly review meeting for possible adjustments where needed. So on daily basis by looking at the pickup trends, lead time patterns, etc., from which segment you are receiving more bookings or less bookings. All these trends you see on daily basis, and then when you have a monthly um, business review or revenue meeting, you can discuss this, and then depending on the situation where you are in, you can make the possible adjustments which are needed basically to meet your to meet your targets. Continuous trends over the long term should be converted into actionable points when deciding on the budgets and forecasts. So if you know that a particular market as a geography, like for example, you'll be for sure receiving bookings from a particular country, particular market is your top producing market. Certain channels are your top producing channels. Um, so those you have to take into consideration when you are deciding on the budget and the forecast on of the coming year, because you know that over the past 7 years or 10 years, for example, it hasn't changed and it keeps on increasing. So you have to keep that in consideration. However, there can be times where you'll not be able to, for example, receive as many bookings as you were receiving in past. However, if you see that the trend is continuous, it's you can just decide based on that while while deciding on your budgets and forecast. And in case you have some unforeseen circumstances, situation arises which forces you to change, then obviously you can change and adopt. A/B testing, as we normally do in marketing campaigns, we try to do different strategies to see um, which is more viable, which is producing or bringing better results, and then you stick to that. So um, it is also advisable that you can try to do that where you are thinking of two different ways to approach the business. Then, and you're not sure, maybe you can try to do the A/B testing on on a small level, uh, not to go really big, to understand how the response is. And then wherever you see that this particular strategy or um, way has better results, you can basically adopt that and just keep doing that or keep following that strategy. This can help you in ultimately in optimizing.